All right, so there's a lot of volatility happening in the financial markets, and there's a lot of reasons behind it as well. Okay, so there's no one single reason. So I'm going to explain to you in simple English that what's happening in the market so that you can protect yourself from any financial downturn. Okay, so this all started, in the last week when the weak CPI data came out in the US, right? And the market did not rip higher. Previously, what happened for the past year or so, whenever the weak economic data comes out, the market rips higher. Why? Because the expectation was that weak data means the Federal Reserve will start cutting rates sooner, and lower rates is going to be good for the financial markets, i.e. stocks. And previously, whenever the weak data comes out, whether this is bad job numbers, bad CPI data, bad PPI data, the market rips higher. But last week, when the weak CPI data came out, the market did not rip higher. In fact, it did the opposite. So that was a light bulb moment for me to understand maybe the narrative is changing now, which is why I've been talking about on my channel that the narrative seems to be changing now. Okay, the bad news is not good news anymore. It's becoming bad news now. And because of the bad news, the market is not doing what it was doing before. Okay, and then when the Federal Reserve came out in the FOMC meeting, they also talked about how they're pretty much going to be reducing rates by September. So very dovish tone, and market realized, so now it's being confirmed that the Federal Reserve is now also seeing the economic deterioration under the hood. And since then, the market was kind of losing points. We saw a lot of volatility in the bond market on Friday, and I made a video about how the SAM rule triggered the recession in the US. And during the weekend, especially last night, when the Asian markets opened up, that completely changed the overall narrative. It actually sent a ripple effects across the global market because of this yen carry trade. Now, what is yen carry trade? Is basically a very common investment strategy where the investors, pretty much the day traders and the big hedge fund owners, they actually borrowed money from the markets where they're offering lower rates and in weaker currency, i.e. Japanese yen. And they were basically investing that money into the capital markets or in equity markets where they get better return, i.e. US equity markets like Nvidia and other tech stocks, maybe Bitcoin as well. And when Bank of Japan decided to raise interest rate last week by 0.25%, that actually made yen stronger against US dollar. So that weak currency narrative is not there anymore. Plus the difference between the interest rate that they were taking advantage of because of the spread, that also become narrower. Okay, because of that, they were seeing the loss that they were going to incur on that borrowed money from Japanese markets because they invested into the US equity markets, right? So they start selling the US assets that they purchased using that borrowed capital, right, in Japanese yen and from the Japanese banks, because they wanted to pay back the loan, right, because it was getting expensive. So that triggered a massive sell-off by those riskier leverage investors. And because it becomes a self-fulfilling prophecy, because imagine if you have one fire exit in a building and you have thousands of people trapped. So what's going to happen if the alarm goes off? Everybody will rush towards that fire exit, right? What's going to happen? It's going to be a mayhem. It's going to be a chaos. That's exactly what happens when everybody start selling those leverage trades. That creates a ripple effect. That creates a self-fulfilling prophecy. Other investors also saw that they also start selling their trades as well and rush towards the safe haven like bonds, which is why the bond yields were crashing. Okay, when the capital was flown from the equity markets into the bond market, the bond yield will start crashing. And that's exactly what happened. And initially, I thought this was basically because of the recessionary fears that we saw happening since the FOMC meeting came out last week. But this whole yen carry trade dynamics, I did not consider that could actually trigger a massive sell-off in the markets. So that's exactly what happened since last night. We're seeing massive sell-offs in the tech stocks, Nasdaq particularly, Dow Jones. Bitcoin was pretty much under 50,000 this morning. It came back a little bit, but the other crypto assets like Ethereum, they were butchered, to be honest, butchered big time. And is this going to continue? Who knows? But what I noticed that, when you combine all of this with the weak job numbers, the unemployment data, the tech layoffs, okay, the SAM rule, which triggered last week, the yield curve, twos and the tens, it got uninverted this morning. Okay, what I mentioned in my last video, that maybe by Monday we will see the yield curve gets uninverted, and this is exactly what happened this morning. So all of these things are happening in the background already. You only need one big catalyst to trigger that momentum that could lead towards a bigger recessionary period. Okay, now would that be a bigger catalyst? Okay, who knows? But it actually triggered a momentum that is leading towards this massive sell-off in the global financial markets. And it's not just US, it's happening everywhere. Okay, the bond market is very volatile, the equity markets are very volatile, the Asian market, like Japanese market, it was completely annihilated. Okay, we haven't seen that massive layoff in the Japanese Nikkei index, I guess, again ever. Like, this was the historic sell-off happened in the Japanese market. So that's the situation, guys. I don't know if it's going to continue or not, but I think things are looking pretty scarier. The VIX volatility index, at some point it was above 70%. Now it came down, right? I think around sub 30%, but earlier this morning it was 74%. Okay, that's the volatility we were seeing in the market, and this was exactly the same as we saw back in March 2020 during the COVID times. So the yield curve is getting inverted, which is the biggest news, to be honest. It has been uninverted first time since June 2022, which is the biggest news, to be honest. If that remains uninverted, then we may be able to see that things are really becoming recessionary. Now, a lot of people will say the recession is already there. Yes, I know that. But I think the yield curve has been one of the best indicator, and when it inverts and it stays as inverted for a few months, I think it has been inverted for last 2 years. And when it gets uninverted, which means it goes above the zero line and then back up, this is when things get really messy, and this is when the stuff hits the fan, to be honest. Anyway, you let me know what you think about it. How are you protecting your finances and your financial freedom? Let me know in the comment section. If you have any suggestions to improve my content, or if you see something incorrect in my analysis, I'll be happy to be corrected. Point me in the comment section. Check out the links in the description below. There's some free stuff available for you, and I'll see you in my next video. Take care. If you are an investor in the US, in Canada, or in Europe, and you are considering investing into Dubai real estate market, this video is for you, because we have a platform called Stake, which allows you to invest into the residential real estate market and start earning rental income right away without going through a lengthy documentation process or coming up with a heavy down payment. Stake is built upon the concept of crowdfunding. So it is democratizing the entire investment strategy and allows you to own a single unit of the entire investment portfolio. So you don't have to own the entire property, right? You can be part of the pool that can actually own a piece of property, a piece of real estate. So that allows you to start with as low as 2,000 dirhams, and you can slowly ramp up. So as you start investing into it, you can not only own a bit of real estate, but you also get a portion of the rental income on monthly basis. So it's a passive investment strategy, diversifying your portfolio from traditional North American or European markets into Dubai, which is hustling and bustling and growing very fast, and allows you to build your wealth over time. So don't delay. There is a link down there in the description. If you click on this, it will give you free 200 dirhams in your account right away to start with, and you can thank me later.